It's that time of year again. Budget day in Ireland. The government has just announced the 2026 budget, and there's a lot to unpack. Some of it expected, but a few things maybe not so much. From tax changes and cost of living supports to housing and pensions. This year's budget is trying to balance short-term relief with long-term planning. Whether it actually hits that balance is another question. So, what's it like for you, the business owner, or the employee, the renter, or the landlord? Well, let's break it down. The budget is always a complex topic, and we sometimes can't see the ramifications of it right away. But to help you understand it, I'm going to break it down in a few different sections. Firstly, let's go through very quickly the major changes. Minimum wage is up 65 cents. Now it's $14.15 per hour. Auto-Enrolment pensions, or MyFutureFund, launching January 2026, and it's mandatory for employers. VAT cut to some hospitality services, food and hairdressing from 13.5% to 9%, effective July 2026. Research and development tax credits and entrepreneur relief both increased to encourage investment. Core welfare payments up €10 per week. Child support plus €8 for under 12s and plus €16 for over 12s. Fuel allowance up from €33 to €38 per week. Universal social charge band widened to reduce low income tax pressure. Energy VAT 9% is extended to 2030. No more once-off energy or cost of living credits this year, and the total social protection budget is $28.9 billion. So that's the budget 2026 in a nutshell. How will this affect you as a business owner? Let's have a look. First up, we have Auto-Enrolment, the new pension system called MyFutureFund. If you employ staff, you now have to automatically enroll eligible employees into a pension and match their 1.5% contribution. And the state will top it up as well with a specified amount. Now that amount hasn't been specified at the time of recording this video, but we hope to see some clarification going forward. Now, for the employer, there may be some benefits of auto-enrollment, but it also means more administration and payroll costs for employers. This will start in January 2026, and you and your payroll team will need to be prepared. And then of course, there's the minimum wage increase, up 65 cents to $14.15 per hour. If you're in retail, hospitality, or any labor-heavy sector, that's a real hit to the payroll bill. Good for the employee, maybe not so good for the employer. And of course, when you factor in pensions, PRSI, and compliance, every cent adds up. Now, if you run a hairdressing business, here's some good news. The VAT cuts. From July 2026, VAT drops from 13.5% to 9% for some hospitality sectors, food services, and hairdressing. That's either a chance to reduce prices for customers or hold steady and improve your margins. But just make sure that your POS or point of sale system is updated with the new rate. But that's not all with VAT. The reduced 9% VAT rate on energy covering gas and electricity is being extended until 2030. So you won't make a saving on your energy bills, but you won't make a loss either. It will remain the same from a tax perspective. And for larger companies focused on innovation, the research and development tax credit is rising from 30% to 35%. That means more money back for businesses investing in new technology, software, or products. I spoke to Jane and Philip from our tax team about the research and development relief. This is what they had to say.
One place Ireland has always benefited in the last couple of years is our R&D credit. We do try and guarantee we're one of the best at it. Announced in the budget today, the relief on the credit is now going from 30% up to 35%. And also, as people know, you can claim your R&D credit over 3 years. But for smaller companies engaging in R&D, there is a relief that within the first year, if the credit relief is below a certain threshold, you will be allowed that. So as part of this budget, that first year figure is increasing from 75,000 to 87,500. That is coming in well, that you're talking someone who's spending up to probably 200, 250,000 will get everything in year one rather than have to spread it over the 3 years.
The work that you have to do for the R&D credit for the reimbursement, say, that you get through your corporation tax return, and just make companies think that they shouldn't go down that road or that there's too much work in it for what they're going to get. So if you're now going to get more money back in the first year of the return, in the first year of the operation of the credit. That's going to be fantastic for companies. From a cash flow perspective, that'll alleviate a lot of the pressures that they kind of come across or when they're trying to apply the R&D credit. Obviously, the increase to the percentage of the relief as well is very, very welcome. So we'll just have to wait to see what happens with the changes to the definitions for outsourcing and qualifying expenditure.
So that's your research and development. And if you're selling or transferring your business, the entrepreneur relief cap has increased from 1 million to 1.5 million, keeping the 10% capital gains rate on qualifying disposals. That's a big plus for founders, family companies and long-term business owners. Here's what Jane had to say on that topic.
So in terms of the entrepreneur relief, there's a lifetime limit currently of €1 million on gains to which the entrepreneur relief can be applied. So basically what the entrepreneur relief does is reduces the capital gains tax rate payable on your gains from 33% to 10%. So with the threshold of €1 million at the moment, you're basically bringing your capital gains tax payable on €1 million of a gain from 330,000 down to 100,000. So today's announcement, where the threshold would increase to 1.5 million, has the potential to give a tax saving, I suppose, to entrepreneurs of 115,000 if the conditions of the relief were met on further disposals. Where we find this might be most beneficial is in situations where you might have somebody who has utilised all of their retirement relief on disposals to third parties. So that limit for most people, if they haven't yet attained the age of 70, is 750,000. Normally, where the conditions of one relief are met, the conditions of the other relief might be met also. And if you're utilising your retirement relief, you have the potential to also erode your entrepreneur relief. So if you make a disposal for your 750,000 sales proceeds for retirement relief and relieve your gain in full, you then only have €250,000 on which entrepreneur relief can be applied at a later date if the conditions of the two reliefs are met. So now with the increase of the threshold to 1.5 million, you could have an entrepreneur or somebody selling qualifying assets or qualifying shares where they might have utilised a bulk of their relief previously. Sometimes people don't even know that they've used both retirement relief and entrepreneur relief. They don't realise that the sale has eroded both thresholds. So particularly in those sort of circumstances, being able to tell people that there's an additional bit of relief available to them, it's very welcome news indeed.
So overall, this budget sends a clear message. If you're running a business in Ireland, it's time to tighten up your operations, but think long term. Yes, wages, pensions and compliance costs are all rising. But the government is also nudging you toward innovation, growth and investment. It's less about short-term savings and more about rewarding businesses that build, scale and stay. Now, if you're a small business who isn't doing research and development, here's Emer, our head of payroll, giving her thoughts on the SME sector.
Your SME employer, yes, you've got an increase to national minimum wage. Yes, you've got auto-enrolment coming at you. But they're also keeping the VAT rate at 9% on electricity charges. Not going to save you anything, but it's not going to increase. So there is other measures there to support the SME sector. And it is always important to remind people, there was recently an increase to the PRSI. That's there as a social fund. And as part of that social fund, there is a training fund. And it's something I think people forget when they're paying their PRSI every week. There is a training fund there. There's loads of courses out there. If you need to increase skills across the workforce, if you'd like to increase your skills yourself, there's different courses for skills to improve and skills to compete. People should look at them. They should definitely be doing the courses that are out there. There is a lot of online stuff. You don't even have to go somewhere to do it.
That's briefly the effects of a business or business owner. But let's have a look at the employee. Good news if you're earning the minimum wage. You'll get a raise. That's about €25 extra per week before tax. And from January, you'll also start contributing to the MyFutureFund, the new auto-enrolment pension scheme I mentioned earlier. You'll put in 1.5% of your salary. Your employer matches it and the state adds another contribution. This has not yet been specified at time of recording, but in the coming weeks and months, we hope to see more information from the government on that. But that money goes into an automatic pension. So for those who don't have one, you're going to be enrolled whether you like it or not. The universal social band is widening, mostly to prevent minimum wage employees from reaching a higher rate. In short, you'll earn a bit more now, and if you haven't got a pension set up already, you're starting to build up long-term retirement savings automatically through the MyFutureFund scheme. And if you do happen to lose your job, the safety net is also improving. From January 2026, most social welfare payments, including job seekers benefit and allowance, go up by €10 per week. And there are proportional increases for the dependents and part-time claimants. There are also new back to work supports, helping people transition from welfare into employment without losing the benefits like fuel allowance. And speaking of families, child support increases again, €8 more per week for kids under 12, and for kids over 12, it's €16 more. The 9% VAT rate on energy stays in place, keeping electricity and gas bills lower. The fuel allowances increase from 33 to 38 per week, helping eligible households with heating costs. But unlike last year, there are no once-off energy credits this winter, so it's worth budgeting ahead. So overall, this budget is about stability and security. You'll see a little more in your pay slip, and if you don't have a pension already, a proper pension pot starting to build, and a couple stronger safety nets if the times get tough. It's not a windfall year, but it is a steady progress, one more predictable income and better long-term support. And a reminder to start thinking not just about today's bills, but your future ones too. So let's go back to Philip for his final thoughts on the budget.
What they've tried to do in past years, it's always been a bit like the Late Late Show. There's one for everyone in the audience. I think what they've tried to do this year is focus it more. So not everyone's going to benefit from this budget on an individual stage, but they're trying as a whole to do what they can to grow the economy the best.
So there you go. That's the 2026 budget. A little give, a little take, and a lot to prepare for. Whether you're running a business, working for one, or somewhere in between, the message is clear. Costs are shifting, planning matters, and compliance is key. And if you have any questions on the budget, please leave them in the comments. We'd be happy to answer them in a future video. And if you want to know more in detail exactly how these changes will impact your business, from payroll and VAT updates to auto-enrolment setup and tax planning, our team here at Malone & Co can help you stay ahead of the curve. Make sure to subscribe for more breakdowns like this. And if you're serious about getting your business ready for 2026, get in touch with Malone & Co today, your accountants for whatever's next. The link to our website is in the description. And I'd like to thank you for watching.